Welcome back to FlexCandle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We'll start from the higher time frames and work our way down to the lower time frames to look for actionable levels and setups. Whether you're looking for the next swing or scalps, this is where the flexing begins. Just remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. All right, let's hit the charts and let's get into it. And today is April 15. It's about 3 p.m. and we're going to start breaking down the one month chart here. And right now I kind of have this in a falling wedge, which would break up about 68% of the time. So right now I'm saying that we're a little bit bullish, and if this were to happen, we could probably see 120 coming in the next couple of months. But there is something that's bearish that is happening here. We do see that the stochastic RSIs are overbought, and we're not in the oversold region yet. This still has to go all the way down. Who knows how long this will stay here. Look how long this stayed here, where it dragged and then it went up. And the 21-day moving average, as we see here, is at 63,536. So if we do the falling wedge all the way down, then there is going to be more downside before we do break up. Something that could happen, which probably would be a better option for us, is instead of this being a falling wedge, maybe this could become some type of a flag. And if this is a flag, then we don't have to go all the way down. We could just continue ranging around here as we let the 21-day moving average catch up to the price. So maybe that could be a scenario as well. And this will probably break up higher than 120, maybe to like 130, 140. We will see. Now let's take a look at the 2-week chart. And the 2-week chart, we're getting into the oversold region, but we still have to round out. This is bullish though, because we are above the 21-day moving average here. The 21-day is at 81,724. So we do not want to go below that. We go below that, then the 63,000 is going to look a little bit more probable. Going down to the weekly chart, we are below the 21-day moving average, but we are oversold here. Now I don't know if this is going to drag down a little bit and then go up, but the 21-day moving average here is about 92,738. Let's call it 93,000 just to make everything easier. Since this is kind of bullish that we're oversold, I could see this green candle getting higher, turning into a little flex candle here and getting at least to 93,000. Now after that, we might reject and bounce off this 50-day moving average. What's bullish here is that we've held support on this 50-day moving average, which is at 77,330. So as long as we don't go below that for too long, we could still remain bullish. So right now, I'm thinking we're at least going to go to 93,000 some point this week. Maybe we'll reject from there, but that looks like a little trade that I would want to put in for myself. Now we take a look at the 3-day chart. We're not overbought yet. We're on the way up. We're kind of breaking out of this pattern a little bit, and we did reject off of the 21-day moving average, which is at 86,347. There's heavy resistance there. But since the stochastics still need room to go up, if we break out of here, the next thing will be the 50-day moving average, which is coincidentally at 93,413. So as you can see, it's already making the story that if we do break from this 21-day moving average, we could at least test the 50-day moving average, which would be 93, which would make sense here for the weekly chart. Now let's go to the 1-day chart. The 1-day chart, we beautifully did a double bottom here, and we went all the way up in the stochastics. Now we are in the overbought region. Now maybe we'll drag here a little bit more. Something that is bearish for today is that this is a bearish hammer. We wicked down basically from the 200-day moving average. There's heavy resistance here at 87,567. We haven't been able to get even to 87 yet, but we are above the 21-day moving average, which is on 82. So if we start falling down, it's possible that we could retest 82, maybe go a little bit below. Hopefully we can make it back up. So I'm seeing a range, guys, between 82k and 93 right now. We need to hold above 81, 82k to remain bullish. Now let's take a look at the 12-hour chart. The 12-hour chart, stochastic RSI is a little bit overbought. We could still drag a little bit before falling down, but I'm not liking this engulfing bearish red candle here. This looks like we could go down and hopefully stay above this 50-day moving average, which is like at 83,488, and the 21-day moving average here is at 81. We need to stay above those levels. Everything's telling us that in these charts. If we take a look at the 4-hour chart now, the 4-hour chart, we were doing good in the stochastic, but we started dropping off here. Now this looks like we're going to go all the way down into this oversold region. We're still above the 200-day moving average. That's at 83,544. So we must stay above that 200-day moving average on the 4-hour. Something that does look bearish right now is this kind of looks like a double top to me. And if we take the measurement to see what that would be, I will take it from this top wick to like the neckline here. And if we put this over, this kind of looks like we could drop down to touch this 50-day moving average, which it would be at 82,000. So a lot of things are telling me that for the short term, we might test the support at 82,000, and then hopefully from there we might pop up. Maybe by the time this drops down, we're in oversold here, and then we'll move back up at least to test 87 to the 93,000 region. Let's take this away here so we could continue. Let's go to the 1-hour chart. The 1-hour chart, we're starting to get into oversold region. We're above the 200, which makes it bullish, but we broke the 21 day. That's a little bit bearish. This kind of looks like a pattern called cat ears. See, it's like an ear. This is the head. This is another ear. It's possible we still have room here in the stochastics to continue being a little overbought. We're getting into the oversold region, so don't be surprised if you see a red candle going all the way down, coincidentally again, to 82, and hopefully bouncing up from there. We need to hold that 82K level. And something that I'm seeing that could be bullish, not right now, but maybe like midterm, is this kind of looks to me like a complex inverted head and shoulder. This is the shoulder, this is the head, and then this could be the shoulder here. And if this does happen, let's see what the measure move is from this wick all the way to about the neckline. Let me put it right here. And let's see if this does break out from here. Let's see where this would put us. If this does break out, this actually takes us, coincidentally, look at that, 92, maybe 93 if we put this a little bit higher. And let's go to the weekly chart. And on the weekly chart, coincidentally, that measure move takes you exactly to the 21-day moving average. So that 4-hour chart, as long as we could stay above the 200-day moving average, even if we go a little bit below, as long as we don't close a lot of candles under the 200-day moving average and we go back up, like we could fall down maybe even to the 50-day moving average, but we cannot stay there. We have to get back up above the 200-day moving average. This looks like this might play out to the 93. So this is giving me some confidence that we should be seeing 93,000 possibly within this week. But short term, we might test that 82K. If we do not hold that 82K, guys, unfortunately, we might end up testing 77K. If that doesn't hold, we might even end up going to 74 again or even below, and then that 63K on the monthly is going to look more and more probable. Now on the 1-hour chart, like I said, we did do the cat ears, so we're getting there. Let's see, it looks like we could test that 15-minute. We're below the 200. This 21 is about to go below the 21 day. That's bearish. So like I said, everything's indicating right now that we are bearish, and we will be testing 81 to 82K, but we might break out of there if we could, you know, keep that as support, and then we might be seeing 93K really soon. All right, guys, that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Stay flexing, and I'll catch you on the next chart.